Hey guys, welcome back to the channel. In today's video, we are talking about C corporations or C Corps. In this video, we'll talk about what they are, some pros and cons of running one, and how to get a C Corp started. By the way, be sure to stick around to the end for discounts you wouldn't be able to get on your own. So that being said, what does having a C Corp mean? Well, a C corporation, or C Corp for short, is its own business structure. A C Corp can have lots of owners and raise money by selling pieces of itself called stock to investors. There are many easily recognized names of C Corps across the country, like Apple, Microsoft, and Coca-Cola, just to name a few. Within C Corps, the company itself is responsible for paying corporate taxes, and owners paying themselves from the business, called dividends, are taxed individually too. C Corps have certain rules they need to follow, like holding meetings with their owners and keeping financial records balanced. Additionally, there are a few things that come with the territory of having a C Corp. First, they are a separate legal entity from their owners, or we would call them shareholders in this case. This means the corporation can enter contracts, own assets, incur liabilities, and enter lawsuits in its own name. Next, there is the limited liability protection. This means that a shareholder's personal assets are generally protected from the corporation's debts and liabilities. For example, I have a tutoring business. Say my business is being sued for whatever reason. As an owner, my personal assets like my house, car, and personal savings would be protected for being used in the lawsuit. Now, taxes, however, are unavoidable. In the case of C Corps, they are taxed twice in something called double taxation. Now, this means that my tutoring corporation would have to pay taxes on its profits at the corporate income tax rate and when I as a shareholder and other shareholders receive their dividends. So what does this look like in the real world? Well, let's say my C Corp makes $100,000 in profits for the year. Now, on those profits, I need to pay corporate income tax. For the sake of simplicity, let's say that tax is 21%. That means my company will pay $21,000 in corporate taxes, leaving $79,000 in after-tax profits. Now let's say those profits are then distributed to me, the shareholder, in the form of dividends. When I receive those dividends, I'll then need to report them on my personal tax return. So let's assume I'm in the 35% tax bracket for qualified dividends. That means I'll owe an additional $27,650 in taxes on the $79,000 in dividends. Now, this scenario is totally made up. But you see, the company pays $21,000 in corporate taxes, and then me, as the shareholder, pays $27,650 in taxes on the dividends received. That's double taxation in a nutshell. The same profits are taxed once at the corporate level and again at the individual shareholder level. However, C Corps have the unique flexibility to retain some of the earnings and reinvest them into the business without having to worry about taxes right away. Now, in my scenario, I was the only shareholder mentioned. But in a C Corp, you can have an unlimited number of shareholders, and there aren't restrictions to who can be shareholders like there is in an S Corp, which limits shareholders to 100 and puts restrictions on who could be a shareholder. In a C Corp, individuals, other corporations, partnerships, and non-US residents can all be shareholders. Now, shareholders receive shares, also called stock. But a C Corp has the ability to issue different classes of stock. The most common is, called common stock. Owners of common stock have voting rights at shareholder meetings and have the potential to receive dividends from the company. However, common shareholders are last in line to receive dividends and assets in the event of liquidation, behind creditors, preferred shareholders, and other priority stockholders. Sometimes a corporation can issue different classes of common stock, such as Class A, B, and so on. Each class may have different voting rights, dividend preferences, or other perks. Just as an example, say Class A shares give shareholders 1 vote per share, while Class B shareholders get 10 votes per share. Depending on your class, your abilities in the company may be just a little bit different. Next level up is the preferred stock. Preferred stockholders have some preferences over common shareholders in certain aspects. They often receive fixed dividends, which are typically higher than dividends paid to common shareholders. Also, if the company were to liquidate, preferred shareholders would be paid before common shareholders, but still after creditors. However, preferred shareholders usually have limited or no voting rights compared to common shareholders. Now, preferred stock has two sides. There is your regular preferred stock, and then there is convertible preferred stock. Here, a shareholder can take a preferred stock and convert it into a set number of common stock. This option gives shareholders the opportunity to benefit from a potential increase in the stock's value while still enjoying the fixed and priority payment in case of liquidation. Now, these next two types of stocks are kept internally and are not for distribution out to the public. Restricted stock is typically issued to employees or directors as part of their benefits package. While the stock is granted upfront, recipients may be subject to certain restrictions like a vesting schedule or performance conditions before they can fully own or sell the stock. Treasury stock refers to shares of a company's own stock that have been repurchased from shareholders. Treasury stock doesn't give shareholders voting rights or the ability to receive dividends. However, it can be reissued or retired depending on what the company's board of directors decides. Now, stocks are only part of the picture that makes up a C-Corp. For example, these types of businesses are more formal than, say, a sole proprietorship, where you're the only operator and no stocks or shareholder meetings are involved. As part of their formal nature, a C-Corp needs to adopt bylaws, which are a set of rules and procedures governing the corporation's internal affairs. Bylaws typically cover shareholder and board of directors meetings, the voting process, officer rules and responsibilities, and whatever else to help the corporation run successfully. One of those things that help a corporation run are meetings. Meetings play a big role in a C-Corp's existence, starting with the organizational meeting. This first step takes place with the board of directors to appoint officers, adopt bylaws, issue stocks, and do whatever they need to do to officially begin the business. Once the corporation officially begins, C-Corps are usually required to hold annual meetings with their shareholders. These meetings are used to elect directors, approve financial statements, and review other legal business. Special meetings may also be called as needed. The board of directors also hold regular meetings to make important decisions on the corporation's behalf, like approving major transactions, hiring key executives, declaring dividends, and making policies. Now, one last thing I think is a must to do regardless of your business entity is to keep up-to-date, accurate records of your company, from corporate activities to stock ledgers and financial records. Keeping all of your legal and financial information organized is not only an obligation to comply with corporate laws, but also will save you a lot of headaches. Now, C-Corps aren't perfect. Along with the benefits, there can be a few drawbacks as well, like double taxation, cost, and the public nature of C-Corps. We went over double taxation earlier in the video. Double taxation means the corporation itself pays taxes on its profits. Then when those profits are distributed to the shareholder as dividends, they pay taxes again on their personal tax returns, which means Uncle Sam gets more money. In addition to paying more taxes, running a C-Corp can be more expensive than some other business types. There are fees for setting it up and costs to keep it running. Plus, you might need to hire professional services to help you navigate everything, which can add up. Finally, if your C-Corp is publicly traded, you'll have to deal with shareholders and the scrutiny that comes with working with the public. As an owner of the corporation, you'll have to answer to them and keep them happy, which can sometimes mean having to make choices to please them rather than what you want. So how does a C-Corp measure up with other business structures out there? Well, for starters, C-Corp owners get to benefit from limited liability protection, which keeps your personal assets separate from the business. If you were to start a sole proprietorship, you wouldn't be able to benefit from that kind of protection. Also, a C-Corp gives you the ability to raise capital by offering different types of stock to investors, giving you room to grow. A C-Corp is the only business structure that gives its owners the ability to attract an unlimited number of shareholders. The only business structure remotely close to this would be through an S-Corp, although the number of shareholders you can have is limited to 100, and there is only one type of stock they can issue. Finally, the life of a C-Corporation is not tied to the life of its owners or shareholders. It can continue to exist regardless of changes in ownership, one of the only business structures where the process can be seamless. So how can you get on the road to C-Corp ownership? Well, for starters, I would recommend checking out your state's guidelines. I'll go ahead and give a general overview, but if you want to get down to the specifics, I would check with your Secretary of State's website, or for a more streamlined way to learn more about the process, hang around to the end of the video. So first, you're going to want to think of a name for your corporation. Make sure it's unique and obviously not already taken by another business. It also wouldn't hurt to trademark your business name so that it can't be taken by another business regardless of your state. Now that you've taken the first step, it's time to get things rolling. Getting an EIN number from the IRS is important for tax purposes, like filing tax returns, hiring employees, and opening bank accounts. On the subject of bank accounts, you'll definitely want to open a business bank account in the name of the corporation to separate business finances from your personal finances. Be sure to get any permits or licenses needed to run your business. Register for state and local taxes, like sales tax, or employer withholding tax if you plan on having employees. Before you can hit the ground running, you need to draft corporate bylaws. These bylaws set the rules and procedures that run your corporation. Bylaws usually spell out different topics like shareholder and board of directors meetings, voting procedures, officer roles and responsibilities, and other topics to help the corporation run smoothly. Now you need friends. Well, a board of directors. With your new board, you'll hold an organizational meeting to appoint officers, adopt those bylaws, issue stock, and do what you need to do to officially start the corporation. Now you can begin preparing and filing your articles of incorporation, also called a certificate of incorporation. That can either be done with your Secretary of State or wherever is required in the state where you intend to start your corporation. The articles typically include basic information about your business, like its name, purpose, registered agent, aka who takes care of the legal stuff, and your initial board of directors. Now, some states require newly formed corporations to file an initial report or statement of information shortly after incorporating. That's going to depend on your state, so definitely check if that's something you need to take care of. Once things get rolling, you'll start to issue stock certificates to shareholders to show their ownership in the corporation. It's also important to plan for ongoing requirements, like holding annual meetings of shareholders and directors, filing annual reports with the state, maintaining corporate records, and fulfilling tax obligations. Now, I know this sounds like a lot of steps, and it totally is. Starting my LLC by myself was one of the most difficult processes I'd ever encountered until I got help when a friend told me about Tailor Brands. Tailor Brands can help you with just about everything in your business. They can help with your taxes, getting business licenses, opening business accounts, and even marketing your business. I've personally benefited from using their marketing resources. They offer a few features that I found made branding my business a little bit easier. Some of the things you can get are a free web domain for a year, a website design builder, 8 free logos, a digital business card, and tools for creating content for social media. Having said that, I see Tailor Brands as one of the best business formation services out there, especially for beginners like me, because they take care of everything on your behalf. Now, don't get me wrong, there are other great services that I've also tried, like ZenBusiness, LegalZoom, and Swift Filings. So I'll go ahead and leave some review videos down in the description if you want to learn more about them too. So what does Tailor Brands cost? Well, one of the most frequent services they provide is LLC formation, which is a great stepping stone for forming a C-Corp. They can either provide a little bit of help or a lot, depending on your needs. If you just need a little bit of help getting started, the light plan might be the best fit for you. Now, there is no cost for this plan, so it's definitely budget friendly. Your only financial obligation would be the cost of the state fees. In terms of paperwork, it'd all be on you to complete, and the processing time for your documents through Tailor Brands is 14 days. So if you have time to spare and are able to handle it all yourself, this option could be just the right fit. If you need more help with the legal stuff but have everything else worked out, you can go with the Essential Plan. This includes helping you establish an operating agreement for your LLC, handling your annual compliance obligations to make sure your LLC stays legal, and when you form your LLC through them, they'll expedite your paperwork to your state within 2 days versus their standard 14-day processing time. This plan runs around $200 a year, and just as a heads up, you would still need to pay your state fees separately. If you're like me and need help with it all, you can choose the Elite Plan for around $250 a year. This plan gives you everything you get with the Essential Plan, plus their online branding and marketing tools that we talked about earlier. Now, the road to business ownership isn't always easy. There are a lot of things that can come up and sometimes things you aren't prepared for. I started my tutoring business after being furloughed from my teaching job. I was in such a rush to get things going, I made a mistake on my legal paperwork. After realizing I was a hot mess who needed some help, a friend told me about Tailor Brands. Getting started with them, I knew I was going to need as much help as I could get, so I chose the Elite plan. Now, I understand it is the more expensive of the three, but I feel like the benefits they offer outweigh the costs. And that's going to be it for today. I really hope you found this video useful, and if you did, please hit the like button and subscribe for more. And as for those discounts I mentioned at the beginning of the video, if you want Tailor Brands to help form your business, check out the affiliate link in the description for discounts you wouldn't be able to find on your own. And be sure to take advantage of their detailed free business resources to help you get started. And while you're in the description, check out my in-depth review of Tailor Brands. Also, feel free to leave any questions in the comments below, and I'll try my best to answer them as soon as I can. Thanks again so much for watching. See you next time.